Hello, everybody, and welcome. And today I'm with John Ryan of Allianz. John, how are you today?
Very good, Peter. Thanks very much.
Great. And Allianz, for our banking audience, what we're trying to do today is get everybody on the alert of how the insurance industry is actually highly relevant to banking risk. John, you are Chief Underwriting Officer with Allianz Ireland. You've also got Board of Management responsibility for sustainability. Is that correct?
Yeah, that's correct. Yeah, so I took over responsibility for sustainability just earlier this year, but I've been heavily involved now for the last few years as
Okay.
we're yeah.
Okay, so it's in spite of rollbacks, we might talk about that later. It's still extremely important and especially directly important in your industry. So, one of the things we're pretty clear of, anybody looking out the window can see that climate risk and catastrophe risk, that is something that's on the rise, and it's certainly changed the outlook for the insurance industry. And we're particularly pleased to have a representative from Allianz because earlier this year, the head office board issued a white paper which had a fairly electrifying effect on the systemic risk posed by that. So, how would you say that the climate risk and catastrophe risk has changed the outlook for the insurance industry over these past few years and what's like going forward?
Yeah, look, it's absolutely changed in the last decade, and even if we even just think back to last year in 2024, so that was the hottest year on record, since temperatures began. So since global temperatures were recorded in 1880, and that just took over from 2023. So it was 2023 was the hottest year, and then 2024 stepped up again. So it was 1.5 degrees hotter than it has been in the pre-industrial era. And it's not just those 2 years. The last decade, the last 10-year average, that's up. Um, that has been also the hottest decade. So that's the warmest decade since temperatures began. So it's not just last year in 2023, it's the last decade. So it's absolutely undeniable, like that climate change is here, and it's really having an effect. But in terms of how that's translating then through in terms of insurance losses, so 2024, that was the losses when you adjust for inflation, that was 75% up versus the 30-year average. Um, so like that was a huge change. And if you take the last 10 years of losses, again, adjusted for inflation, that's up about 30%. So last decade, significant step change up, and then the more recent years, the losses are really starting to rack up, and that trend isn't subsiding or going away. The expectations from the experts is that that will continue to increase, and we'll continue to see a step up in terms of climate related losses, as we move forward. So
Okay.
yeah, absolutely, the landscape has changed dramatically in the last 10 years. And it's really important now that we start to act and as quickly as we can to, I suppose, mitigate the further effects of that, but also start to adapt to the new reality of what we're facing.
Okay, so this obviously will be reflected in premiums, which obviously are becoming more and more onerous for business, and there's really not too much that's going to change there over the next while. That's one way, of course, it's affecting business. Um, so but that's where you can actually insure something, and the word that's really coming out a lot these days is uninsurability. So, what are the implications of that? Because it seems to me that there are more and more places that are on the borderline or have gone over the line in terms of insurability. How real is that as a threat and the risk it poses?
Yeah, no, and absolutely. Like, and we're seeing, in certain states in America, there are risks which now are just uninsurable from a risk perspective. So from a natural catastrophe perspective, so that exposure is increasing. So you know, and I suppose first of all, before we get into insurance, it's not just insurers. Like, so obviously, as costs of natural catastrophes increase, that will have an impact on premium. but there's wider impacts that businesses are facing. So there's the increased disruption that it causes beyond the initial insurance loss. There's also supply chain disruptions that it can cause as well. So if they're dependent on supplies from a specific country that's now impacted from a nat cat event, that will have knock-on implications. But in terms of insurability, yeah, it is impacting that some areas are now becoming more uninsurable, or some perils are becoming more uninsurable from a nat cat perspective. And if we think about maybe, if you think about our local, locally here in Ireland, I suppose the biggest threat that we face in Ireland is the rising sea levels. So that is an inevitable fact that sea levels will continue to rise. So any coastal communities or communities that will be affected by that will pose a threat in terms of potential insurance losses, potential uninsurability in the future, unless we start to adapt for the climate that we now face. So that's a key aspect that I suppose insurers need to, and government and developers and planning authorities need to reflect on now, that we need to adapt to the new reality that we're facing, both from a planning point of view, but also in terms of how we adapt the existing building stock in Ireland and in other jurisdictions that are at more risk now from climate-related perils.
Okay, so a couple of things then from what we've discussed so far. I guess we have the rising premiums, sorry, with the straight up uninsurability, which is where you can't get insurance, and the second thing is rising premiums, which make it unaffordable, I guess, which leads to less coverage.
And look, I suppose that's where we need to push back in the other direction in terms of prevention is better than cure. So
Yeah.
we can't continue down the path that we are in terms of continuing to build in areas that are more exposed to specific perils like flood or wildfire. We need to look at, from a planning perspective, where we're building. We also need to look at how we adapt for existing buildings that are already in place, so that we can mitigate the effect of that increased risk. So prevention is definitely better than cure in terms of the cleanup costs and restaging properties back to where they were. And so that's the focus that I suppose the insurance industry, government, developers, policymakers need to focus on, to make sure that we can now adapt to the reality that we're facing. But at the same time, like, we need to continue to mitigate those effects. I suppose from a banking point of view, where it really correlates from a banking point of view, is that existing assets now are under increasing threat. And so where properties are mortgaged, or if customers are now seeking a mortgage in an area that may be flood prone or may be more exposed from a specific peril into the future, that becomes an increasing threat from also from a banking point of view in terms of finance, and not just in terms of personal customers, but also commercial customers. And I suppose that's where we need to work together, from stakeholder point of view, because it's not just an insurance issue; it's a complete societal issue. So all stakeholders need to be actively involved in the process and make sure that we're building up that resilience to mitigate the effects of what's already coming down the track, in terms of adapting, the infrastructure, the buildings, the flood defenses, but also at the same time making sure that we're mitigating any further effects as much as we can in terms of increased climate change.
And how do you go about that? I mean, do you lobby government? Do you lobby authorities? And, secondly, in terms of the banking industry and that threat to asset values, do you think the industry is cognizant of the systemic risk posed by uninsurability?
Um, so maybe take
Yeah.
those two questions. So, like, in terms of what we're doing, um, I suppose first in terms of our own operations, like, so everybody needs to play their part and everybody needs to lead by example as much as they can. So to lead the way. So from a climate mitigation point of view, what we're doing is we're reducing our own emissions. Like, so we're looking at our own energy consumption within our own building. We're trying to retrofit. We've switched completely to green energy in terms of electricity. We'll be looking to switch out our heating system, move to heat pumps. A lot of organizations, particularly larger organizations, are moving that direction. So they're doing their part in terms of climate mitigation. Again, we've electrified our own fleet, and we're obviously looking to reduce our travel emissions wherever we can. Then from a product point of view, we're trying to incentivize our customers to live more sustainability through our product design.
Mm.
So to take an example, for our household product, we've introduced building energy rating discount. So if you have a more energy efficient home, your premium will be less versus if you don't. So if you're retrofitting and upgrading your home, we see that as a win-win. So your home will be more resilient, not just in that cat perils, but it will be more resilient in terms of the upgrade and the investment that you've put into the property. And in turn, we can reward those customers with a reduced premium as a result. Similarly, on the motor side, we've introduced incentives in terms of customers who don't need to commute to work on a very regular basis. So trying to take account, I suppose, of the hybrid working environment that we're operating in now, and rewarding those customers who are using their cars less, so reducing their carbon footprint. And again, that's a reduction in risk. If you're on the roads less, there's less opportunity for a claim, but it's also benefiting the environment, like in terms of sustainability. Then outside of incentivizations around premium, we've built in some benefits and some new processes into our products. So on our home insurance side, we've a benefit. So if you have a substantial claim and your house is undergoing a significant reinstatement, so if it's a claim above €50,000, we will add in an additional €6,000 to go towards energy efficient upgrades. So when you're going through that pain of that dramatic event, it's an opportunity to see how you can invest further in your home upgrade to make it more energy efficient and more resilient going forward. And then on the motor side, we've introduced a green parts initiative. So we're reducing claims excess in return for using high quality, guaranteed, recycled parts. So again, and that's seen really good uptake and really good feedback from our approved repairer network in terms of the that. So I suppose we're trying to address our own emissions, and then we're trying to introduce incentives and adapt our products to incentivize our customers also to move in that direction. I suppose the other big one then, which you mentioned, was climate adaptation. So how are we influencing policy? Like how are we trying to drive change? So there's two big initiatives that we're running here, and that feed into our overall kind of group center of excellence in terms of climate adaptation and climate resilience. So the first one is our climate safe homes research project that we've developed. So this is a pioneering initiative. So it's designed to strengthen the climate resilience of the Irish housing stock. So making Irish homes safer and more resilient and better prepared for the climate challenges that they face ahead. So that's effectively a research program, and we're aiming to identify and develop practical ways to make both new homes and existing homes more climate resilient. So look, really what that means is that we'll be running about 5 different research work streams, and the findings of these will hopefully help inform national policy, so to drive that policy change and guide developers and support homeowners. So it's not a commercial project. It's about creating, I suppose, a shared framework for how Ireland and then other jurisdictions as well, how they can future-proof their homes going forward in terms of the effects of climate change. So that's one area. The other big area, I suppose, and it's really correlated in relation to assets, is on the flood risk side. So again, we've been engaging with policymakers in our local government in terms of how do we mitigate the effects of flood going forward. So what we're working on with our insurance industry body, so Insurance Ireland, is trying to develop a scheme, so a grant scheme, so very similar to what you'd see in many jurisdictions in terms of building energy upgrade schemes, but more about how you can proof your individual premises from the effects of flood risk. So that's about installation of flood barriers or flood doors, dry proofing, the walls of your home to make it waterproof in terms of water ingress from flood, and then also non-return valves, and if required, strengthened glass to prevent any. So it's giving, I suppose, homeowners an opportunity to almost instantly, you know, make their homes more resilient from the increasing flood risk, and the opportunity for them to protect asset values. And I really think that that is a huge aspect, for Ireland and any country that will be impacted by sea level rise, and it's not just the coastal aspect of flood, but it's also we're seeing a much increased level of what we call flash flooding,
Hmm.
because the temperatures are hotter now with global warming. The air can absorb way more water, and then when
Wow.
it does come down, it's coming down a lot heavier. So we've seen the level of destruction that happened in Spain, which
Hmm.
over the course of 12 hours, 24 hours, and the absolute havoc and the loss of life that caused. Um, so that's what we're aiming to do in terms of flood mitigation, is to develop, I suppose, a scheme to allow homeowners protect their asset values and protect themselves from those disastrous events, which up until now have been very much left to themselves in terms
Okay.
of how they deal with it from a protection measure. Obviously, there's insurance there for a lot of those cases, but they're finding it increasingly hard to get flood insurance, and this is where these type of flood adaptation schemes need to come in to give policyholders the ability to put those measures in place.
Okay, so the insurance industry knows there's a problem, and you're designing things to, modify behaviors and all that kind of stuff. I guess on the banking side, there's been something of a retreat from certain commitments. Net Zero Banking Alliance, outfits like that, seem to be rolling back. And so, just to wrap up, what would be your observations on that kind of rollback on climate change commitments and those related disclosure requirements? Do you see that being, changed again over the next while? And how important is it that we keep the pressure on in terms of those sustainable goals?
Yeah, look, it's hugely important that we keep the pressure on and keep driving forward. Obviously, some of the announcements in terms of rollbacks of commitments is, not what we want to hear. But I suppose it is important to, I suppose, reflect on the progress that we've already made. So if we go back a decade ago and we talk about investments and global energy investments, so the split back, 10 years ago was about 45% in clean energy versus 55% of investments we're still going into fossil fuels. Now that split is more like 64% in terms of clean energy versus 36% of fossil fuels. So despite some of the rollbacks in terms of targets, we are constantly seeing an ever increasing level of investment into cleaner and renewable energy sources. And I suppose, in terms of competitive advantage, like I would see that will win out in the end. So it's an opportunity, for certain jurisdictions, for certain countries to really push ahead and accelerate in terms of their investment into renewable finance, like, so investment into those infrastructure projects, and I can only see them accelerating into the future. So we're all aware that there have been a lot of hurdles in terms of need to get through the planning hurdle we need to get through, making sure that the infrastructure is there to be able to support those infrastructural projects and rollouts. So they've been hurdles that have been there, but they're slowly being, I suppose, worked through and moving along. So it should only accelerate going forward, like in terms of that investment. And I think that's where it will come through because in a highly electrified economy where you have control over your energy resource, that will drive a competitive advantage going forward into the future. So even though there has been some temporary rollbacks in terms of targets, I do see that that presents big opportunities, elsewhere for companies and for jurisdictions to push ahead and really drive a competitive advantage. In terms of the disclosure requirements, I think that that's probably been a welcome aspect, for everybody, because there is really the feeling or the feedback there that look, we need to concentrate more in terms of driving action, and driving execution on their plans rather than uh, devoting a significant amount of resource into the reporting of all those metrics. So we need to
Mm.
really start driving ahead in terms of the action and the rollout of the infrastructure that we need, both in terms of mitigating the climate effects, but then also adapting to the future that we're already facing at the moment.
Okay, great stuff. Well, I suppose the main message is let's hope that all works out because from a banking point of view, if you can't insure it, you can't lend against it. So those kind of effects are very real. John Wright, thank you very much indeed. Great to talk to you. All the very best for now.
Thanks very much, Peter.